There you go.
All right. Hey everyone, it's Liz over at the Jones Group, and today my special guest is Jason Lund with Lund Financial Management. And Jason and I have spent some fun times talking over the last couple of years about the market, the times, everything. And we were talking last week, and I said, Jason, let's do this recording for everyone. These are kind of uncertain times, and everybody's feeling a little unease. And my simple question to Jason was, so where are you guiding people in the next quarter, the next half a year? And, what's the advice you're taking for yourself and giving out to others?
Well, to preface, the advice I give others is the advice I give myself. It all depends upon what category you're in, what risk you're going to take, where you are in life. What can you wake up tomorrow and be without monetarily and still feel that your spouse won't leave you? If we're looking at an attempt to garner what we're upcoming, the upcoming month, quarter, half a year or so, I want to let everybody know in advance, don't be afraid. I have to tell you this. Ignore the information around you because it's all designed to capture your attention, create either a pit in your stomach of fear or an effective greed to take action when it is probably not necessary. Always do what's right. Think before you leap. It'll do you great. Looking for the next month or so, I'm actually unsure. There's a lot of probability uncertainty at this point in time because nobody knows what the sea change is going to be in Congress. On an entirely apolitical basis, human nature only, when you lose, you cozy up to the guys that won. You think it'll be better for you. Do that and have done that since we wandered out of caves. So the next month, I think it's really a status quo of what we see here as we work through if, what, who, blame, everything going back and forth. All that being said, the next quarter, I am expressing caution. We don't know what is going to happen because the sea change is going to be based upon an international view of perceived strengths and other things in DC. We're tied to China at the hip. Europe's having real trouble. Canada also. We have to look on the macro. And what I am doing personally is cinching up where clients that have real good gains. At this moment in time, I'm just cinching up. So if the markets decide to pull a fast one, as we say, they're going to keep most of what they do.
So in other words, you're setting some stop gaps.
Or stop losses are being, I like to call it skinny down. When you buy a volatile stock, you sometimes set a loss at 25%. You can bear that on one line item. Okay, it's up 75%. Well, you change that. And a lot of my clients, I'm changing it to 10 to 12%. I want them to keep the money. My take over 30 years is if markets make a decision to pass for a period of time at 10% level, they're likely headed to 20 or more for at least a quarter. Why not take advantage? Nothing wrong with that. And I also counsel people, don't be afraid to sell a security you earned money on and wait until it cycles down again and buy it again. It's a funny thing. It's like getting wet in the rain. Did you know that you'll dry?
Yeah.
If you sell your Apple, you bought at 60, you can buy it again when it drops 30% on the next cycle. But what you can do is take that asset you've earned and expose it to where it will be a better influence on the rest of your portfolio, your growth. Remember that as you're aging, take less risk. I'm 59, I feel 16. I'm not 16. I take the risk of a 65-year-old.
Right, right.
But when you're an aggressive 18-year-old to 40 and you're doing it right, do it. If you're a moderate investor, you're 40 to 60, it's okay. And you know what? If you're an investor and you want to take 2% of what you have and take a speculative risk with it. I've never met anyone, I've said it's okay to do that lost anything more than one sock. You can do that. You can buy another sock. But sometimes just to do it, you want to do it. And then you prove to yourself you don't know how to do it professionally. And you go back to making yourself money and not breaking money.
I love that. What great advice. I mean, it really, there's a gem of wisdom for every age group in that. Thank you. I mean, I know that a lot of my team are young professionals and there's a whole lifetime of savings for them. And so I'm excited for them so they can take some of those big risks. And you're right. I need to look at my earning potential and how many more years I have through and protect what I've grown. And the market has been very good to us. So this is great. Any last words of wisdom about, I mean, obviously you're in trades and funds and things like that. How about from your perspective, telling your clients, is real estate a safe bet right now in their
If
portfolio?
you're going to buy real estate is a decent bet in California. It's going to be the rest of your life. There's no other place on the planet called California. There are several places like California, but Tuscany is pretty well occupied. California still has an occupancy rating that can be filled. I don't see how it is any way, shape, or form bad, whether you want to invest for an income return or you just want to move up, knowing that in the cycles that come, you're going to be up again later in 20 years if you plan to retire and move. But what you do is you talk to Liz. So you have information and an empirical source that is in your best interest.
Thank you. Well, I love
One
that.
final
Oh,
caveat for everybody, if you don't mind. When you're doing what you're doing to retire, quit just being a saver. Your grandparents were savers. Just learn how to be an investor. That's all. And a
love
planner
it.
a little bit, because the difference could be 30 or 40% of your wealth 30 years later.
That's wonderful. Great advice. And it's true too. I've seen that in my own, as I have one CD that's sitting aside, $100,000 earning nothing, and it's a CD, and I take a same matching 100,000 and watch it grow. Whether it's up or down, it's got a clear path. So great advice. Jason, thank you so much for taking a few minutes. And for those of you out here, I hope you've enjoyed this wisdom. It's not something we get every day. So thanks, Jason.
Great to talk to you, Liz. Bye now.
You too. Take care.